That market, please. Minor loss for the Dow. It's off 27 points. NASDAQ doing well, up 180. Jason Katz joining me this morning. I see the economy as resilient. Why should the Fed cut rates?
Because it's significantly harder to stem the tide of a deteriorating job market than it is to deal with the one-time effects in terms of tariff inflation. So we're entering into this paradigm where good news may become bad news. Look, the consumer businesses have been far more resilient. All this crazy inflation never came to pass, and earnings never fell off a cliff. But we're seeing signs that the job market is waning a little bit here. So everyone thought the Fed had cover. But now we had a resilient job number last week, and we had revisions in GDP to the upside. Now people are thinking, wait, Fed, you better not cut rates. I just really hope they stay the course here. If they do, we will avoid a recession. If they don't, it's up for debate.
And the market will not take kindly if there's no rate cuts.
No.
They won't like that at all.
The market, it's a prerequisite to maintain this bull market and to avoid a recession, to maintain a slow, steady regimen of rate cuts.
Tell me about 401ks. I know there have been some changes. Back in the day, not too long ago, you had a 401k and you could put stocks into it, you could put bonds into it.
Fun.
Now, there's a whole list of other stuff you can invest in and put in your 401k. What's going on?
Yeah, starting next year, the democratization of alternative investments is now going to be at the access of the common 401k investor. Think hedge funds, think private equity, think private credit. Now, this is great to the extent that it's further diversification. You don't need a good stock market for some of those investments to work out. But there's the other side of that. These are opaque. They're not as liquid. The fees are higher. And you're going to have a huge universe of these new funds chasing a finite universe of private investments. So it's critically important that the 401k community be educated and understand that this should be a portion of your assets. It will help mitigate the volatility of your returns, but don't get over your skis. 10 or 20% at most in these alternative investments.
I'm just trying to think of how this works. Let's suppose that I buy a small piece of SpaceX. That would be a private equity investment, correct?
Well, SpaceX would be probably a part of a private equity or venture fund, which in turn may be a 401k choice. You won't be able to buy directly into SpaceX per se, but a basket of SpaceX's.
But I could do that?
Yes.
And that could go in my 401k?
Precisely.
Whereas at the moment it cannot?
Right.
Okay. Wonder if I'll do that. I don't know.
Keep on contributing. You're still working.
I am. I'm still contributing. That's true. Jason, thanks for joining us.
You bet.
Good stuff.